Hi, I'm Gail Guerin. I'm here with Phil Cummins of QIC. We're at the SuperInvestor in Singapore. QIC is the third largest asset manager in Australia, and Phil's here to talk a little bit about their private equity program, which started in 2005. So, Phil, can you talk in general how you're approaching private equity the last few years, but specifically what you're seeing in Asia?
Yes, no, we've been investing in private equity since 2005. We invest with sort of three core components, being fund investing, co-investing and direct investing, and also we do secondaries. We have sort of been building that program over time. We have, for example, very much a global program, so we invest without a domestic bias to Australia. So Australia represents less than 5% of our assets. So we sort of have a general representation across the globe. We have approximately 30% of our program in co-investments, and we also actively invest in secondaries.
Now, do you have a specific allocation, a preset allocation that so much is going to be in the U.S., so much is going to be in Asia, or is it more opportunistic?
It is opportunistic. We look for the best opportunities globally. We benchmark globally. We have some portfolio guidelines which are fairly broad with regards to geographic allocations. But what we are tending to do is try and find the best managers within regions and within strategies, but really do take an approach of trying to benchmark globally. So whether it is a manager that's sitting somewhere in Europe, the US or Asia, we do take a global approach when we're either looking at funds or co-investments.
So when did you start looking at Asia? When did you do your first investment in Asia?
So we made our first fund commitment in Asia in 2007. We have committed to 4 fund managers within the Asian region, and that's China and India. The regions and the strategies that we've been focused on to date have been focused in around venture capital and growth equity. We haven't made any fund commitments or co-investments in the control buyout or more traditional private equity segment of the market. Our sort of focus has been really we've taken a cautious approach to Asia, and whether it's in Asia or whether it's in other parts of the world, we do take an approach of having deeper relationships but fewer relationships. So Asia is a market that we've spent a lot of time trying to develop those networks and those relationships. So I think to date we've made 4. We've got 4 fund managers, but I think we'll see that grow over time. It's I think in terms of Asia, it's still early days for us.
So what's the thinking behind just looking at venture capital and growth type strategies versus more middle market strategies, which is what you're investing in other parts of the world?
I think it's more to do with the development of the private equity market generally within Asia. So the control buyout segment of the market is certainly less mature than it is, in our view, in developed markets. Also, the managers that we've committed to in Asia to date have been affiliated with some of the Western managers. So, for example, it's where the managers themselves have had a global approach, and they've set up funds in China, for example. So we're actually invested with them in the US, and then we've also made some commitments to their China-based strategy. So that was a good way for us to enter the market with partners or groups that we know well, particularly from the US side, for example, and then allows us time to be able to experience those markets, get to know those teams better, but also get to know the market more broadly. I think the private equity, the control buyout, or more traditional private equity segment of the market has been an area we've taken a cautious approach to. So we haven't gone for a Pan-Asian or a global large buyout group that's got a particular China allocation or an Asian allocation. I think our strategy there is we want to be able to invest with domestic groups And I think, across the board, whether it be traditional private equity and the controlled buyout space, and also on the growth equity and venture capital, I think it's important as this market matures to actually be with the domestic groups as opposed to the affiliated groups. We think the affiliated groups was a great way back in sort of the mid-2000s point in time to be able to enter that market for us, where we were both in our development as well as the development of the private equity market in Asia. But going forward, we're having a much more a direct representation in this market and looking for groups that we can back, that we know and sort of have developed through our networks.
So when you come to the point where your program is fully mature and you've made all your investments, what percentage do you think is actually going to be represented in Asia?
We don't have a specific target, but I think what we will see is today, I think we're probably less than 5% in Asia. That's ex-Australia. I think over the next couple of years, I could see that doubling. But I think the general focus of Asia as part of our total portfolio will continue to increase. I think we certainly have the exposures we have in the developed markets, and I think the area which we want to grow the portfolio over time is in Asia. So we'll see that continue to increase as a percentage.
Okay, thanks very much.